The market continues to be on the move. Yesterday was a lot of drama with up, then down. Now we're back up again. And so what I'm going to do is take a little tour around the main index futures. So for the S&P 500, NASDAQ, Dow, and Russell Index, just looking at the big contract, if you will, the Emini S&P 500 and the other Emini contracts. So we can all just sort of get our bearings before the market closes up, and then we get into the Thanksgiving week, which tends to have a lighter volume trading, but also retail stocks tend to move a lot on like Black Friday and Cyber Monday because of their shopping activity, right, that they're getting from sales. So let me just start here with the ESZ25, okay? So this is the December contract of the futures market. So if you trade anything S&P 500, this is a place you can look. You could also look at the micro E-mini or the SPY ETF. Now, here's the daily chart. And believe it or not, Gann, all right, G-A-N, Mr. Gann from back in the day, he used to think the daily chart was noisy. And personally, I see what he means, okay? There can be lots of volatility. So what we're going to do is for each of these, we're going to look back out at the weekly, get some perspective, and then check on the daily as well. Now, I'm already starting on the daily for the ES. And earlier, I brought attention to this trend line from August 1st and October 10th. We've clearly broken below it. That's why I have a dash line. And now I'm going to change it to gray. Not because it's going to be super useful, but I do want to know if we trade back to it because it was support and now may provide resistance. I have the October 10th low as a pink dash line, meaning support. That's the pink, but dash meaning, hey, it was technically broken. But you can see that so far today, we have not closed below that level, okay? So when you're looking at these broad market indexes, the way that the session finishes, where it closes, can be very telling. Now, if you are a short-term trader, then obviously whatever time frame you're on underneath is where you should get your signals from. But it helps to have the daily chart perspective. All right, now I'm going to jump to a blank weekly chart, okay? I'm just going to ignore all these annotations and kind of start fresh. And this is the same ESZ25 on a weekly time frame. Now, what I'm seeing here is that we had a doji high that ended the month of October, and we've been lower since. But again, here we are testing the week ending October 10th low, haven't closed below the level, but have definitely violated it. So worst case scenario, if we continue to move lower, how low may we go? Well, the first thing I'll check is the amount of retracement we may see. And I use Gann levels for retracement. So I mark 25, 50, and 75 versus past traded history, okay? Because past price levels are much more important than projections, in this case of retracements. So the next downside target, if we keep weakening, which I don't know yet, right? I'm gonna keep tabs on the market day today for myself, is the week ending September 5th low, 6427 on the ES. That would be the next place to be on guard if we continue to weaken. All right, now from there, I'm not going to be worried about too much else. You could think, oh, well, what about all the other levels? In order to get to a lower support, you have to break down beneath the first support that's in your way, right? Same thing with resistance. So I try not to get caught up in like months and years worth of support and resistance. Frankly, it's going to change. And so why do all that work? Now, if you're trading an intraday chart, yes, of course, you want to kind of have the stair step ready because markets move faster, right? But on a daily and a weekly chart, we don't need that. Now I'm going to take this weekly chart and change it to NASDAQ futures. Again, this is a weekly chart. So similar situation, right? Declining from October 31st week, tested the October 10th week low, haven't closed below it yet. So you can still apply the similar type of retracements to see where we may be headed. But of course, look at the retracements versus actual traded price action. Now, interestingly here, we have retraced 25%. I'm checking back on the ES to see if we did. Yep, on the ES, we have not had a 25% retracement yet. So what does this mean? So this is helpful to be aware of when you're trading indexes because they kind of sometimes move in a related way. The ES futures market has not retraced 25%. It's made less of a retracement, right? And that makes sense because even though it's tech leaning, right, with NVIDIA and all these big tech players in the top 10 of the weighting, it has lots of other different stocks in it. NASDAQ, on the other hand, which is what the NQZ25 is based off of, is 100 stocks and they're very tech heavy. So because tech stocks have been weak this week, it's not surprising if this retraced 25%. In fact, depending on the activity of those tech stocks, the NASDAQ tends to just make a more exaggerated move versus the S&P. So that's just a little tip for you out there. So if you're trading NQ or micro NQ and you're like, why are these moves all over the place? And HEMA's S&P chart is calmer because tech stocks tend to move more dramatically. So we have a 25% retracement. So what's next? Well, there's a 50% retracement down below, sure. But before that, there's a platform of support that is around this 23,500 area, okay? There's a bunch of different levels there, but that's what we can look at, and that's also the September 5th week. So again, if we continue, I'm not saying we will, but if we do, that would be the next downside target. On the other hand, the YM futures, the Emini Dow, well, the Dow Industrial Average only has about 30 components. So this is reflective of a smaller group of stocks. And in this case, it has not even broken below the October 10th low. That's still intact as support. So when you're looking at these different indices and learning one, trying to pick one to choose, in my experience, the YM, it tends to move a little bit slower than the S&P or the NASDAQ. So it might be a good vehicle if you kind of want something a little more tame, okay? That being said, it's still weak right now. And it's coming off of a doji. So if we continue beneath that October 10th low, then we can still map out those retracements, see where 25% might land. And interestingly, it's very close to where we are right now. So the next level of support based on past price history would be the week ending August 1st, around 43,800. I'm not saying we're going to fall like a rock to the level. I'm saying if we push below this current floor under the market, around the 45,380 level, then over time could see a move down there, okay? Last but not least is the Russell, right? This is based off of the Russell 2000. So that's 2,000 stocks, but guess what? Those are more small cap. So they tend to not move as much as the big players that are in the S&P and the NASDAQ and the Dow. So we can see that we cleared that October 10th low, right? We have been trading below it for like almost 2 weeks now. But if we look at the same retracement levels to see how far away we are from 25% and 50%, we've already retraced 25%, but notice we have not closed below the 25% retracement. That tells me that these micro or small cap stocks are like edging lower, but not with great force. Also, the RSI power zones on that chart is returning back towards the bull support power zone. And the last time it was there was August 1st, which was a major buying opportunity. So I don't have a crystal ball, but I will say this. And listen, I have to keep saying that, guys, because I have experience, but I don't have future knowledge of the market in my hands, okay? This is what I'll say. Based on my experience, it's opinion, it is not fact, it's just educational commentary. If this keeps weakening, if the Russells, if the small caps keep weakening as well, I think there's a decent chance the next downside target is the middle of the range from August 1st, okay? So around 2235, and then the August 1st low around 2165. I'm just rounding here. So that's what I'm seeing across these charts. Notice I didn't even go down to the daily on those other indexes because I wanted that big picture perspective. And this is a very helpful exercise for you to do on a Friday, better yet on the weekend once the actual weekly bar is closed. Okay, so if you ever feel dazed and confused and lost by all the noise of the week, think like Gann, go to the weekly chart and definitely glance at it before you get into your trading for the week ahead. All right, so if you found value in this video, right, and helpful takeaways on technical analysis, insights on markets that you may be watching and trading, go ahead and hit that like button and I'll catch you in the next video.